Shares of Nvidia hitting a 3-week low to kick off the month this morning. And this comes amid broader pressure on the chip sector following those Nvidia earnings. The next big test for semiconductors, we've got Broadcom earnings expected this Thursday after the close. So can Broadcom meet the moment and reignite the hype around the chips that power AI? Joining us to discuss, we've got Stacy Rasgon. He is a senior analyst over at Bernstein. Stacy, it's always a pleasure to speak with you. So I know you've got an outperform here on Broadcom. What are you expecting as we head into those earnings on Thursday?
Yeah, you bet. So I like Broadcom. Broadcom's got a few pieces. So they do have the AI story, which I was classify as the second best AI story in the space. They make chips for the hyperscalers like Google and Meta that are actually working on their own chips. Broadcom does that design work for them. They've also got a big play in AI networking. Couple things that I like about it going into the print. So I feel like their AI guidance for the year has been reasonably conservative. They're guiding 11 billion for the full year, which is a run rate in the second half that's actually a little lower than where they were running in Q2. So that feels like a decent setup on the AI front. And while their core business has not been great this year, they're not the only ones. It's cyclically low. I think they've cut it enough. Marvell's earnings last week were a little supportive there. Some of their end customers have reported. I think that setup into next year looks good. In the meantime, the AI piece has been strong enough to bridge any issues with the core business, so their numbers have still been going up rather than down. They've also started, not even started, they've also got a pretty sizable software story. They just bought a company called VMware, which does virtualization. I feel like that there is probably upside as you look through expectations for the software business as we go into next year. The numbers are very, I think that are currently in the sell side numbers, very conservative. I think there's good upside on the software. And even just look more broadly, I would say it's got some of the best operating metrics, margins and free cash flow and everything else in the space by a mile. And it's still very inexpensive. It's at a pretty sharp discount to the broader semiconductor space. For a company with, again, it's almost half software, great AI story. It feels like the multiple is easily supported, I think, at current levels. I actually really like Broadcom.
And so with that in mind, Stacy, and great to see you again, as you think about Broadcom and VMware becoming accretive to the business, what type of contribution are you expecting Broadcom to be able to extract from VMware that flows through to its earnings?
Yeah, you bet. So, I mean, a lot of it flows through the earnings. Software in general has very high contribution margins. Right? What they've suggested is that they believe they can be doing, they guided to about $12 billion in total revenue this year, fine. They think it's probably doing $4 billion a quarter by Q4 or Q1. Again, if you look at what's in the numbers going forward next year, next year, the street's not modeling much more than $16 billion for the entirety of next year, so they're not modeling a lot of growth off of that run rate. The company believes that they can grow this business in the double digits like for the next 3 years. And again, like Hock Tan runs this, so usually when he puts a target out there, they're pretty good at hitting it. There's an old saying, like, in Hock we trust. But it does look like they're on that path, and I don't think the current estimates around that business are aggressive at all.
Hey, Stacy, just zooming out a bit, we got that data this morning from the Semiconductor Industry Association saying that sales data in the semi space was below seasonal trends. Is that a concern to you?
No, so that's the monthly data. It tends to be a little noisy.
Okay.
You can take a 3-month outlook, which like a rolling 3 months, which is actually the public numbers that they put out, and it's a little more supportive. You have to also remember a lot of the growth in the industry, like both positive and negative recently, has been memory. I think non-memory was still up, I can't remember, 6% or something year over year. I think more broadly, though, in the industry, you have to remember, like currently, it's been a very asynchronous cycle. Some end markets have been very bad. Some of them have hit bottom. Some of them are past bottom. Some of them are not. I'd say things like PCs and smartphones, they're not great this year, but they'll probably grow a little bit versus last year. AI is clearly off the chart strong. Traditional data center is fairly weak. Again, go back to Broadcom. Their networking guidance for this week for this year is pretty weak. Broad x86 server chips from Intel or AMD are pretty weak. Industrial's rolling over pretty hard. It's actually been rolling over for quite a few quarters. I think there's some hope that we may have found the bottom. I think it sort of depends. Some companies have, some have not. And then automotive has sort of been the latest cycle. And by the way, I've been nervous about auto for a while. It's held in much better than I ever would have thought. It is now starting to roll over now, and that tends to be take a little longer. And so it's been a very asynchronous cycle. what that actually is the effect of doing overall is sort of stretching the entire thing out because you have different end markets that are rolling and recovering at different times. But I don't think you can look at the entire industry in aggregate at this point. I think you do have to pick and choose which parts of the market you're looking at, which parts of the market you want to be playing in.
All right, well, then we got to talk about Nvidia. It's down 8% today. What's next for this stock?
Yeah, but I don't think it's down in isolation. Lots of things are down today, so it's not in Nvidia. So look, they had earnings last week. The print was actually was very good. It was fine. The issue that people had on it was not so much the revenues, or it was the gross margins. They're guiding gross margins down a little bit into the end of the year. I don't actually think they're guiding them down that much. It's just mixed as they have some of their newer products ramped, and because it's early in those ramps, they have not yet optimized the cost structure. So I think that you'll be fine. Like, they're not suggesting that margins are collapsing. They're I think into Q4. They're probably looking for like a 73 or 74%, down from like 75, which I mean, part of me wonders why we're even arguing about margins that are that high. But that was the primary concern on the call. It wasn't so much the numbers or anything else. I think beyond that, with Nvidia, the question now is, they're launching their new product. It's called Blackwell. There was a little bit of a delay. It doesn't seem to be impacting anything all that much. The big question is just what kind of an inflection is Blackwell going to drive next year? What kind of growth does it drive next year? I still don't think the numbers that are out there right now, at least on the sell side, are incredibly aggressive. Buy side expectations are higher. But it does seem very plausible that product cycle, once it starts going, could actually potentially drive another major reflection. That is going to be what probably drives the stock into year end. I think right now people are worried, kind of treads water a little bit until those products actually get into the marketplace, and I get that. But once they start ramping Q4, Q1, I'd expect, if that ramp is solid, I'd expect the stock to probably follow.
Stacey, I only got about 45 seconds left. I've been nerding out over CUDA, which is this compute unified device architecture, and some of our viewers might already well know it, as that's been part of the thesis around Nvidia. How much of that is still driving the investment thesis for Nvidia versus other factors of the business here?
Well, yeah, it does drive it in the sense that people always ask, what is Nvidia's moat? And that is certainly part of it. Like, it's not enough to have if you're a competitor, it's not enough to just have a competitive chip, right? There's the chip and the silicon, and also the hardware ecosystem and the systems engineering and the software and everything else that goes around it that creates that moat. And in fact, some of their competitors like AMD have been, because they have not been able to develop that organically, they've been trying to acquire it. AMD just bought a company called ZT Systems, which actually brings in systems expertise. It was sort of a 1,000-engineer acqui-hire is what it was, but they're trying to bring in that systems expertise that they are now realizing that they need. AMD's also doing a lot of work around their own software. They call it Broadcom. Intel has a software that they call it One API. They're all kind of work to work on this. But you got to remember, NVIDIA's been building out CUDA for 15 years. Once ecosystems get entrenched, it can be very hard sometimes to dislodge them, and NVIDIA at this point is pretty well entrenched.
All right, Stacy, great to get your insights and perspective as always. Stacy Rasgon, who is the Bernstein Senior Analyst. Good to see you.